Oil holding gains as traders weigh geopolitical tensions from Venezuela to Russia and Iran against concerns about a global glut out there. Joining us now is Regina Mayer, Global Head of Clients and Markets at KPMG. Regina, what are your clients down in the oil patch saying these days with WTI crude oil, below $60? They can't be too happy about that.
Well, I think they're actually planning for a lower for longer scenario, Paul, and they've baked in 60 or below into their budgets. They're hoping there's more upside, but I'm of the believer with the bulk of the analysts. EIA is even predicting $55 for Brent on average in 2026. That we do have a structural oversupply situation. I was on your show in November. I said it was about 1.5 million barrels per day excess. It's now 2 million barrels per day excess, with the potential to be as high as 4 million barrels per day excess in 2026. That is a structural oversupply. Some might call it a glut, and I think that's going to be a governor on higher crude prices throughout 2026.
Regina, it's interesting. When we talk about energy, I used to only think of oil, but now because of the AI push and data centers, I think of electricity, I think of natural gas, and the prices of those things are all soaring, or at least moving substantially higher. Why isn't oil doing the same? Why is oil sort of stuck in the doldrums here?
Well, because I think it goes back to what does this overall supply picture look like? And I am watching natural gas. It's one of my big 2026 outlooks, natural gas prices and electricity prices, which gets to the points that you were just raising there. So Henry Hub's been trading at about $4.30 per MMBTU. It was down at $2. So, we're talking about a pretty significant increase. And I've talked to some analysts that say it could get as high as $5, $6, $7 per MMBTU. Part of that is we need more natural gas for electricity generation. We've had 3% increase in electricity generation last year alone. And we've seen electric prices raise almost 5% national average in 2025, as high as 20% in some states, expected to be as high as 4%, another increase of 4% in 2026. That's hitting people in the pocketbook. So while prices at the pump are nice, they're 20 cents lower this year than they were last year. We're seeing a lot of upward pressure on natural gas prices, which is for home heating as well, and electricity generation, and that'll affect consumers.